Welcome back to the Crypto World channel, everyone. My name is Josh, and right now, a massive signal is flashing on this Bitcoin chart, while the price is once again rejecting from this critical area of resistance, heading towards a lot of liquidations likely coming very soon, while Ethereum is continuing to bounce from this critical area of support again. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before taking a look at the Bitcoin charts today, we need to talk about the Bitcoin news today, because just over the last few hours, the German government is continuing to sell more of their Bitcoin holdings. In fact, as of right now, the German government is now holding less than 10,000 Bitcoin, worth around 5 to 600 million US dollars, because just in the last 24 hours, they did actually receive some of that previous Bitcoin back from exchanges that they sent over the last couple of days. But just in the last few hours, the German government sent around 5,600 Bitcoin, worth around 300 million US dollars over towards exchanges to dump on the market. But like I said in my last video here on the channel, the good news about this is within a few days at the current rate of selling, the German government should basically be out of Bitcoin, because over the last couple of days, they've been selling a few $100 million each day worth of Bitcoin. And once again, as of right now, they're still holding roughly around 5 to $600 million worth of Bitcoin. And the Bitcoin ETFs are helping to offset a lot of that selling pressure from the German government, because also so far this week, we have seen some decent net inflows into the spot Bitcoin ETFs, which is helping to buy up a lot of that Bitcoin. But what we need to pay attention to when it comes to the net inflows for the spot Bitcoin ETFs is so far this week, even though we've seen inflows every single day for the first 3 days at least this week, the inflows have actually been declining in values. So first of all, on Monday, we saw a net inflow of close to 300 million US dollars, around $295 million. On Tuesday, we saw a net inflow of around 216 million US dollars. And on Wednesday, we just saw a net inflow of around 147 million US dollars. And so once again, net inflows are still better than net outflows, because inflows basically means buying, outflows means selling. But with that being said, like we can see just here, the inflows are reducing in size, as we've seen so far this week. And so if that trend actually continues and we see less and less inflows, and especially if this flips back into outflows, then that can cause some selling pressure if this trend continues right here. But at least for now, while we're still seeing net inflows, once again, this is good news for the price of Bitcoin, helping to offset a lot of that selling pressure from the German government. And with that being said, taking a look at some other news today, because we just actually saw some new CPI inflation numbers come in just a few hours ago, and these numbers came in very close to expectations, because the expectation was 3.1% year over year for the US CPI inflation rate, but US CPI actually came in at 3.0%, so just 3% flat. And we can see that on this chart, this page right here, where we have the expectation at 3.1%, and it actually came in at 3%. So once again, slightly below expectations, but because it came in extremely close to expectations, not really far away from expectations, due to that, we didn't really see any major impact on the market based on this result right here. And in case you're new to all of this, the reason why I'm talking about the CPI inflation rate for the US is mainly due to the Federal Reserve and interest rates, which can definitely affect markets, the crypto market, the stock market, real estate, etc. And as of right now, the futures market, so basically the market that's betting on what's going to happen in the future, is expecting as the most likely scenario that the Fed will keep interest rates the same at the next Fed meeting, or FOMC meeting, which by the way happens at the end of this month on the 31st of July. And so at least for now, the market is pricing in around a 91% chance of no change in interest rates at that next Fed meeting at the end of the month, and roughly around a 9% chance of an interest rate cut by 0.25% or 25 basis points. And as of right now, the majority in the market is actually expecting the first interest rate cut to really happen in the following Fed meeting. So on the 18th of September, on that Fed meeting, once again, the majority in the market for that Fed meeting right there is expecting the first interest rate cut of 0.25% or 25 basis points. And how this actually affects markets is basically all you need to know is the lower interest rates are, the more bullish that is, the more stimulative that is for markets, and the higher interest rates are, the more restrictive that is for the economy and markets. So the more bearish that is for markets, the higher interest rates are. But with that being said, taking a look at the Bitcoin charts today, first of all, on the 4-day time frame, we just saw a 4-day candle close over the last 1 day, and the candle close did indeed confirm still above the bottom line of this super trend indicator, which is sitting at around 55.8k. And so at least for now, we have not actually confirmed a reversal signal in the super trend indicator here on the 4-day Bitcoin chart, which, by the way, the last reversal signal that we saw from bullish to bearish was right back here at the beginning of the 2022 bear market. And like I've said recently, in order to actually confirm a bearish reversal signal in this indicator right here on this Bitcoin chart, we would need to see at least a 4-day candle close confirm below 55.8k, which at least for now has not happened. And by the way, the next 4-day candle close confirms in a little over 3 days from now. And if we're taking a look at this 3-day Bitcoin chart, at least for now, the RSI is still well below 50, which historically speaking, looking at the last couple of years here, usually those are some pretty decent buying opportunities, especially for the longer term. So this is not a short-term signal. So just based on this signal alone, we should not be expecting a massive pump to the upside in the short term. That is not what this signal means. But personally, based on this signal right here, I am just slowly accumulating Bitcoin on the spot market, basically just dollar cost averaging into Bitcoin, so that even if we see a continued dump in the short term, that would still be okay because I've not gone all in at once and I won't get liquidated because I'm not using any high leverage or anything like that. But when we eventually see some sort of bounce, whether it's right here or potentially from a lower price, either way, when we eventually see some sort of bounce, I would benefit from that bounce with a dollar cost average strategy. But as always, that is not personal financial advice for you because I don't know your personal financial situation. I'm just simply letting you know my strategy as of right now based on my situation. And with that being said, if we're taking a look at this daily Bitcoin chart, what we have just now seen here in the DXY is a major move to the downside, especially right when we saw those new inflation numbers get released. Because once again, as I explained earlier, when the inflation numbers get released, that can affect what the Federal Reserve does with interest rates, and US interest rates can heavily affect the value of the US dollar relative to other fiat currencies. And that is what the DXY is. The DXY is the US dollar index, which basically tells us what the value of the US dollar is compared to other fiat currencies. So if the US dollar is heading to the upside, it means the US dollar is strengthening in value. But if the US dollar index or DXY is heading to the downside, it means the US dollar is weakening compared to other currencies. And usually the DXY or US dollar index has a negative correlation or inverse correlation with the price of Bitcoin, because we're looking at the price of Bitcoin here valued in US dollars, which means if the US dollar index is going to the downside, it makes it much easier for the price of Bitcoin valued in US dollars to go to the upside. Or vice versa, if the US dollar is gaining strength, then it's much more difficult for Bitcoin to be bullish. So usually Bitcoin is bearish while the US dollar is gaining strength. But once again, what we just saw with inflation coming in slightly below expectations was a drop in the value of the US dollar, essentially. Basically, the US dollar lost value relative to other fiat currencies. And once again, usually this is a bullish signal for Bitcoin. And now, of course, we have not seen a massive move to the upside just in the last 1 day. So this is not necessarily just a short-term signal, because as I've said time and time again here on the channel, this is more looking at the trend or momentum on the daily time frame. So at least based on this signal, based on the DXY, we're most likely going to see some more bullish price action potentially in the coming days or weeks. But once again, that is just the most likely scenario, not a 100% guarantee. And that's just based on this one chart right here, which historically speaking is very accurate here for the price of Bitcoin. It works more than 90% of the time. But with that being said, taking a look at this daily Bitcoin chart, and as of right now, we're still technically seeing the bullish divergence play out in the form of a slight bullish relief and some choppy sideways price action, which is the most common outcomes from a bullish divergence. So basically just a bit of a break or relief from the short-term bearish trend, but a bullish divergence by itself is not necessarily enough to confirm the end of the bearish trend. And so as I've already been saying over the last few days, we're most likely going to see a bit more of a break or relief from the bearish trend, something like this, for example, potentially for the rest of this week. In fact, most likely for the rest of this week, possibly going into next week. But then perhaps in around a week or so from now, that sort of time frame, we could potentially see the continuation of that bearish trend later on. That is still a possibility that we need to consider. And in order to avoid that bearish scenario, we need to sometime soon in the next week or so, we need to see a breakout back above key resistance in order to basically avoid that bearish scenario. So once again, either way, just for the coming days, for the remainder of this week, possibly going into next week, I'm still expecting a bit of a relief or a break from the bearish trend. But in that amount of time right here where we're playing out that bullish divergence, we need to see a breakout back above at least this resistance in between $60,000 to $61,000 and ideally back above around $63,000 to $64,000 in order to start flipping much more bullish again in terms of the trend and momentum. But if we fail to break out above key resistance and instead we just see further rejections from resistance, then potentially in a week or two from now, we could end up seeing that continuation of that short-term bearish trend later on. And as for support, we still have a lot of support sitting at around 56 to 57,000, and we have a significant area of support in between around 51,000 to 53,000. And if we're zooming into the short term, looking at the 4-hour Bitcoin chart, what we are seeing right now is yet another almost perfect rejection from this golden pocket area of resistance, which is sitting in between around 59.6K to $60,000. And we just saw a rejection from pretty much exactly 59.6K within $100 of that level. And this is happening just after we saw that previous rejection from the exact same level of resistance here in the short term at around 59,500, a little over a day ago. So at least for now, we still have a lot of resistance in the short term at around 59,500 to $60,000. But at least for now, we're still playing out a lot of choppy sideways price action here, especially over the last couple of days, which once again is one of the most common outcomes from a bullish divergence, basically just a bit of a break or a relief from the bearish trend. And in just a moment, I'll be talking about liquidations likely coming very soon for the price of Bitcoin. But first, if you want to trade any of these moves in the price of Bitcoin or any other crypto, personally, I take just about all of my trades over on Bybit. So I'll make sure to leave a link to Bybit down below this video in the description and in the pinned comment. And if you use that link down below this video to make a Bybit account and deposit on that account, then you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, if you use that link, it'll take you to this page right here, which is a massive lucky draw happening right now. And this is only happening for just the next 4 days. So you might as well check it out. Once again, first link below this video. And so just by trading crypto on Bybit using the link down below this video, once again, you get these chances into this lucky draw where you could potentially win some free Bitcoin or Ethereum or USDT or a trip to an F1 race or up to $100,000 just by trading crypto using the link down below this video. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link down below this video. But for whatever reason, if you cannot access Bybit or if you cannot KYC on Bybit, there is also Bitflex, which is another crypto exchange similar to Bybit, but you don't need KYC for Bitflex. And so I'll also make sure to leave a link to Bitflex down below this video as an alternative crypto exchange. And with that being said, if we're taking a quick look at the Bitcoin liquidation heat map, we can still see a lot of liquidity building up here on the liquidation heat map, sitting in between around 56.6K to around 56.8K. So just below 57,000, we have a lot of liquidity, hundreds of millions of dollars worth of liquidations. And so what this means is that it's extremely likely, once again, no such thing as a guarantee, but it's extremely likely that the price will likely come down towards just below 57,000 to take out a lot of that liquidity, because usually the price of Bitcoin likes to take out liquidity, especially if it's very close to the current price. And the reason why the price tends to go towards these major liquidity areas on the chart is because that is where the very large Bitcoin traders, the whales out there, can fill their very large positions, because that is where there's a lot of liquidity. And so, for example, if we hit this liquidity to the downside, that would liquidate a lot of long positions, potentially hundreds of millions of dollars worth of long positions. And so the big players in the market that have a lot of capital that can move the price of Bitcoin just in the short term at least, they could potentially enter a short position, push the price towards that liquidity, and then that would liquidate long positions, pushing the price lower, and then they profit. Or they can use a different strategy where they push the price downwards to liquidate a lot of those long positions, which basically floods the market with sell orders, because when you liquidate long positions, that basically sells the position. And so with a lot of positions getting liquidated at once, that can basically flood the market with sell pressure, sudden sell pressure, and the big whales out there that might want to buy a lot of Bitcoin at once, but without spiking the price of Bitcoin as they're buying, they may look to execute some sort of strategy like that, where they're liquidating a lot of long positions, causing sell pressure so that they can easily buy up a lot of Bitcoin on the derivatives market, for example, without spiking the price of Bitcoin, because it adds a lot of new sell pressure for those big buyers. And so those are just a couple of reasons as to why the Bitcoin price usually goes towards these major areas of liquidity to basically fill the orders of massive Bitcoin traders out there that can actually move the price, at least just in the short term. But with that being said, taking a look at Ethereum on the daily time frame, and right now the price of ETH is continuing to bounce from this exact area of support again, sitting in between around 2.8k to 2.9k. And within the last 1 week, we saw pretty much 2 perfect bounces from within that exact area of support. As we've seen previously, around a month or 2 ago, we saw a lot of bounces from this exact area of support. So at least for now, there's still a lot of demand, a lot of buying pressure around 2.8k to 2.9k. And as I've also mentioned recently here on the channel, of course, we're not only bouncing from critical support, we're also bouncing from oversold territories here in the daily Ethereum RSI, which if we're zooming out on the daily time frame, that was the first time in around 300 days where we saw the daily Ethereum RSI go into oversold territories. And usually when the RSI goes into oversold territories, especially on the daily time frame, at least in the shorter term, it means we're due to see a bit of a bullish relief, or at least a neutral relief, so a pause from the short-term bearish trend. But this signal by itself is not necessarily enough to confirm the end or the bottom for the bearish trend. And so, like I've already been saying recently here on the channel for nearly a week now, I do expect either a slight bullish relief or at least some choppy sideways price action as the most likely scenario just for the remainder of this week, possibly going into next week. But there is still the possibility that perhaps sometime next week, for example, we could possibly see the continuation of that short-term bearish trend later on. That is still a possible scenario that we need to consider. But with that being said, if we're taking a look at the 6-hour time frame, right now the price almost perfectly rejected from this Fibonacci level of resistance, which is sitting at around 3250, and the price rejected from around 3230 approximately. And so around that area, around the low to mid 3.2k price range, we have a lot of short-term resistance around that area. And as for short-term support, we could now find a bit of support at around 3080, so just below 3.1k. Because that was a previous Fibonacci level of resistance and also temporary support right here over the last 1 to 2 days or so. And with that being said, taking a quick look at the price of Solana, and we are once again rejecting from this critical area of resistance, sitting in between around 140 to 144 here on the 12-hour time frame. And so as of right now, that is still the resistance to pay attention to, as the price has been fighting for the last few days here. And as for support, we still have a significant area of support in between 120 to 128. And so at least for now, in terms of the trend and momentum in the shorter term for the price of Solana, we're actually looking relatively neutral, basically just in a massive sideways price range, chopping around sideways, similar to what we saw back here. And if we see a confirmed breakout with candle closes back above around 144, then in that case, our next short-term resistance is in between around 152 to 154. And above that, we have a significant level of resistance based on previous support and resistance sitting at around 160. And once again, if you want to trade any of these moves in the price of Solana or any other crypto, check out those links down below this video. And believe it or not, you can actually make a lot of easy profits in choppy sideways price action just like this. And if you want to know how to do that, then check out the video in the bottom left of your screen right now. Because that video right there in the bottom left of your screen shows you how you can easily profit from choppy sideways price action, and the video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.